Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Thursday, December 12th, 2024. It is 9:55 a.m. Eastern Time. I'm starting the video, so we're almost 30 minutes in the trading day. I'm going to get out one to you today on commodities. I've got some contractors coming to the house in a minute here. We're going to redo the boat lift. I got to get out there and move the boat off and do some stuff, make sure they get going. So I don't know. I'll try to get that out to you by noon. But I wanted to just do an update on what I haven't done in a while is a overview of the top holdings of the Nasdaq 100. I usually go through the Mag 7, Mag 8, whatever you want to call them. I'm going to go down through about the top, I don't know, maybe it's 10 or so, down to Netflix. I'm going to get to that one. And just kind of give you an idea, because again, if you know where the top, even the top 5, especially the top 10 are going, then you know where the whole market's going, because the Nasdaq 100 is just kind of a more concentrated view of the same stocks that move the entire market, including the S&P 500. So that's what I'll do here. I'll start out with the S&P 500. There was that breakdown the other day, as I told you yesterday, back testing. Today, a rejection off the back test, nothing big. As I said in that post this morning, and I've been talking about recently, I don't mean to be wishy-washy, but that's what you have right now. Two cross currents that will have the potential to lead to whipsaws. Both seasonality, a fact that a lot of people on vacation now, trading volumes drop off, and that leads to whipsaws, year-end position squaring, tax loss harvesting, all that other good stuff. Window dressing will be coming into at the end of the month. And then we have the big Fed meeting next week. ECB just cut another quarter point. Fed's expected to cut a quarter point, but of course it's about what they say. Saw some a little bit hotter than expected, or softer, I should say, employment numbers today on the employment data. That gave a little pullback to the markets pre-market. That's the one last pillar that's been holding the market up is the jobs market and consumer spending. Many say it's mostly government jobs. There's a lot of criticism of the job survey, but we won't get into that. I just want to go over the charts. So that's what we're going to do. I'm going to go over a handful of charts, tell you levels to watch. Again, I've thrown out the possibility or the increased odds of whipsaws this time of year due to seasonality, due to the Fed meeting. However, at the end of the day, it's your decision to decide whether to take or pass on a sell signal based on what you believe, where you think things are going. So all I can do is give you the levels and let you decide, tell you the levels that I think matter. And in the S&P 500, it's this 60-minute wedge. Here, breakdown as I highlighted 2 days ago, back test as I highlighted yesterday, and so far a rejection. But this is a big level here. About 643 is where I have the line. You can see it was that previous high, previous high, previous high breakout. And so a break of that level is likely to bring you down to these targets I gave you here. In my opinion, at least this one right here, 585.50. And from where we're at now, that would cause a pullback in the S&P of about 3.42%. Now, again, so that's if. And the whole if is, you need sell signal 1. So far, we have a breakdown, a back test. You need to take out this level. That increases the odds. Let's say right now, if I put the odds of just north of 50%, then they will go up to, let's just say, 65%, maybe even 70% that we're going to do that. Now, if that happens, then we look at QQQ, which I told you today. We're up here. This is the primary trend line, the most significant one coming off the near-term trend line off the August 5th lows. Very important in my opinion. And I'm going to measure it out for you. You don't go straight down as the crow flies. That's about 2.74%, but you don't fly straight down unless there's a crash. You would zigzag down. So it's going to take it, as I said, about 2.5%, give or take, just to get to the trend line. And then a little more than that to break it. So keep that in mind. So if SPY were to go down about that much, it stands to reason that QQQ will also go down that much or more. QQQ usually goes up and down more in any given day or on any longer term trend than SPY. It goes up in a multiple of SPY. It's not a fixed multiple, but let's just say it's 1.1. An extra 10% or so, whatever that number is. It's just due to the higher concentration of high growth, high beta tech stocks and the lack of steady Eddie dividend paying things, a lot of utilities and healthcare and financials and things that the S&P has a lot of that tends to cushion the downside or hold it back. Okay, so that's that. Those are your levels. Finally, you know me. Maybe I'm putting too much stock in NVIDIA, but I think it's hard to argue that this is not one of, if not the most important stock right now and over the last year or so in the market. That one, as I said, starting to crack the 60-minute trend line. Really not clearly taken out yet. Let me jump over to the daily chart. And this is it. That same 60-minute trend line off the August 5th lows on the 60-minute chart comes all the way back here to the 2022 lows. So a very significant trend line, and one that NVIDIA cracked the other day with that, as I highlighted on Tuesday. Red candle, back tested yesterday. So far a rejection, not an impulsive rejection. So pretty much, if you look, I've got another board here. This is the level I think should do the trick. You can see I have a support zone. That's when I have two support levels in close proximity. I refer to that as a support zone instead of a support level. My zone runs from about 130.62 up to 132.55. It's defined by all these reaction highs there, that trading range, top of that. Then we broke out above it, back tested it, back tested it, back tested it, back tested it there. So that should be the check mark, kind of the okay, NVIDIA is clearly broken down, and just about all eyes can see it. Because again, this is a very obvious trend line. I give few guarantees in this thing we call trading, but I can guarantee I'm not the only one watching this trend line, and I can all but guarantee there's quite a few stops set under there. This is a stock extremely full of hot air, so just don't underestimate how far fast it can fall if and when those sell signals are triggered. And of course, NVIDIA is only going to go so far without the market as well. So that's what the rest of this video I'm going to do right now. I'm going to segue into the rest of it. Now I can go over the daily and weekly charts. I've been covering those a long time. I'm not going to do that in this video. Nothing has changed. We've got big divergence. And again, I always say divergence is not a sell signal, but more often than not, it does play out for a trend reversal. Sell signals come on a break of support, so that's what I'm going to cover in this video. Here's Apple. This is just my daily chart here. These are the last 1, 2, 3 divergent highs. Those were all well into the double-digit corrections that followed. That one right there, we milked that one down to the August 5th lows, cover bounce. And so I see absolutely no reason why this time should be any different. My outlook hasn't changed. Again, divergence is not a sell signal, but what is a break of support. So we're going to focus on the 60-minute chart. Those are levels I'm going to give you. Drop down here to the 60, divergent low, bullish, long and strong, divergent high, correction. Divergent low, rally, divergent high, I think you can see it right here, correction. Simple stuff, right? Not always so easy, but that's the gist of it. This is the world of the swing trader. So right now, Apple has this minor trend line, which is just starting to crack. It's not super well defined, but it's every bit as defined as the previous ones that did the trick before. This one might have had more reactions there, but you have quite a few reactions, so it's valid enough. Break to that trend line. I'm going to give you one little micro level where they'll step in and buy it on the way down. If it hits about 241.74, then when that gets taken out, this is a excellent target for a pullback between now and you might want to be out or light going into the FOMC meeting, or not, depending on what the charts look like. But so Apple, I'm calling for a pullback off the recent highs from yesterday or earlier today of about 5%. And it's a great target. Why? Because that was a major reaction high, major reaction high, major reaction high right there, all-time highs, and then a breakout. A breakout that, based on the technicals, will probably be back tested at least. And if we do, you also have the uptrend line off, you got it, April 5th lows, big trend line. So that's, again, a pullback target if you're longer term bullish, looking to where to buy Apple objectively. That's a great spot. However, based on the divergences, you got to be careful when you get these overbought conditions, divergences. It's increasing the odds that sooner or later this trend line will not be bought up, but will be taken out. So I would expect one last hurrah off it because it's such good support, aligning with horizontal price support as well. But then if and when that goes, then that could trigger a bigger correction down to these levels you see here. So right now, watch that level right there, little minor trend line. NVIDIA, I already covered, kind of flirting with it on the 60-minute chart, below it now. Again, you want to see the recent lows get taken out on the 60 right here, that T2-ish level right there, and that should bring it. Otherwise, they buy it up here, then what you have is just, from this perspective, a successful test. Like I like to say, even on the daily chart I have us below it, you got to really zoom in to see it. When you zoom out here, if you look at it this way, you can't say that's a definitive breakdown. You kind of get, too literal on this, you're going to get whipped around. Again, I think a break below the recent lows will do the trick, and I gave you some levels a minute ago on, it's about right there, 132-ish. Microsoft, Mr. Softy. What I have here, let's see, I didn't mark it up, but we're starting to diverge here finally. It's been a while since we diverged, had a divergent high on the 60-minute chart, so I'm going to borrow that, draw out the divergence that I just drew down there with the indicators. And again, divergent high right here to the left of the chart. Correction, divergent high, correction, divergent low, rally, divergent high. I think you can see it right here. Correction, so you got it. Divergent low, rally, divergent high, correction, divergent high, correction, divergent high, correction. Where to? You can see some levels here. Amazon, nice wedge. Amazon has a very well-defined trend line right there. So replicate this. Again, I'm on a 60-minute chart. I use log scaling. If you don't use log scaling, you're going to get slightly different or maybe very different trend lines. Divergent high, that wasn't much, a little correction. They don't all play out for, and sometimes they get taken out, but for most part, this is swing trading. And then there's, I'm sure if I looked here, I'd probably find a couple divergent lows like right here. But there it is. So that's our wedge. This is what we have right now. And that's why I wanted to do the video. We have a lot of these similar setups. This is Alphabet. No divergence, but potential near-term buying climax. You see the high volume, that spike up there. When you go to the daily chart, it's testing and likely to fail that previous high right there. And you go to the weekly chart and nothing's changed. The stock put in a big divergent high back here. This equal or marginal new high is still very much a divergent high. I'm going to pull that trend line and change it right now for you. There's the bigger picture of Alphabet. Meta, let's drop back down to the 60. I'll stay on task here. Divergent high right there. I probably could add a trend line. I don't have a very well-defined one. I just can tell you right now we are finally, for the first time in a while, starting to diverge. Last time I had it was right here. The stock, I need to do this to measure it. I have to grab where that high was and move down so I don't move my trend line. That's about a 9% drop. So in this one here was about roughly close to that too, another 9% drop. So kind of gives you an idea of, even though this one's stair-stepping higher, it's time for a correction. Tesla, there's a nice big fat divergent high, bigger divergence. This one I expect to drop at minimum, bare minimum. Once this, the trend line will break, and well, there's a minor trend line, we can do that. Right here, little minor, very minor trend line. That should get the party started to this one, and then when that one goes down here, 360.45. Always cover a little bit above the support level that you're targeting in case a buyer step in early, but that's calling for a 15% drop in Tesla right there. And I pointed it out a couple times through here, is a potential short based on resistance, but we never had, this is the first time we have nice, clean, big negative divergence. The last time I had any divergence on the Tesla 60 was back here on that divergent low. I did that back on October 24th. And that divergent low was a catalyst, technical catalyst for this rally that we're in now. Broadcom, that is divergent high. It's starting to steepen a little bit here. We've had equal highs on the indicators and price. And also I could borrow that, put divergent high there. Not one of my favorite, but let me get to the last two, Costco and Netflix. So most of those are big tech stocks. Here's Costco. Big divergence, nice clean trend line too. So what you're seeing here, and the reason I wanted to do this video, it's a lot more efficient for me to do a video than to try to screenshot and annotate all these charts. It's quicker this way, believe it or not, to get it out to you. And yeah, that's a big old fat clean bearish rising wedge pattern. And I'm trying to give you targets, support levels, call them. Either way, a break of that trend line will trigger a sell signal in Costco, and I think it has the potential to easily come down to this level. That would be a drop of about 7% in Costco right there. So again, the reason for the video is the timing right now. I haven't done a video on the Mag 7 since I've been back from vacation, or Mag 8, 9, whatever we're calling it now, because there just wasn't a lot that I was seeing in the charts. And now I am, hence the video is coming out to you. One of my favorite right here is Netflix. This is a stock, or more a company I love to hate. Personally, I think a lot of their content's garbage. That's just me. I don't mean to offend anyone, but I have two kids in college and my wife, and every now and then I keep canceling it, and then Dad, where's the Netflix account? So I fire it back up. I can't even count on both hands the number of subscription services I pay for. So just trying to cull out the fat here, and just restarted it again. Last time it was my wife. Somebody told her about some show, the one with the rabbi and Kristen Bell, I think her name is, or whatever, and it was kind of meh in my opinion. But anyways, so that's over. We watched the first season, and I went to cancel today. It's been on my list. I just wanted to share this with you guys. I know I'm kind of going off on a tangent here, digressing, but so I go in, I've had a note cancel, and it keeps rolling. I finally, okay, I went from a mental note to cancel it to an actual reminder. And so what I noticed new today, other than is, if most of you probably have Netflix or have had it, constant price increases. Price increase. Okay, now we'll keep the price same, but you can only watch it on one stream. And if you want two streams, do this, whatever, no big deal. But again, it adds up. And I just see a cratering of this. When the economy turns and the consumer, we see the unemployment rate start to spike, which, we're been ticking up. There's going to be a point where there's going to be a reckoning with all these subscription services, Paramount Plus and Netflix and YouTube TV and everything, you name it, all of them. And Netflix, I think, will take it on the chin. But what I noticed this time around, and correct me if I'm wrong, it's been a while since the last time I canceled, but this seems new to me. I've canceled before, and you log back in when you want to pick it up, and it's got your watch list and your personal recommendations and all that. So this time around, what they're trying to do is, if you want to keep all that stuff, you can only pause for a month, and then they're going to auto resume and hit your card again. That to me, I don't like it, and I don't know if it's going to backfire with consumers. That's a kind of a lousy business model, in my opinion. I believe when you used to cancel in the past, I did, and always kept my personal recommendations and all that stuff. So anyways, whether that's here or there or not, we'll see. The consumer is going to keep subscribing to Netflix till they stop, but it's a beautiful, and I shared this with you recently. It's a setup shared with you. It's a big old rising wedge pattern here on the daily chart. That's what we're looking at. And on the 60-minute chart, there it is. There's if you want to sharpen your pencil, like I like to do. The 60s tend to get you in quicker, and that's the setup right there. It's a nice clean uptrend line. By clean, I mean no violations, well-defined. Almost got it there. Here. You know what? I can give you some support levels. You can just look at these reactions here where it'll bounce, but I think this one comes down at minimum to right here. And I'm going to quantify it for you right now, 771. Obviously, and it's important on all these that I just covered, it's really going to help, and it's almost a necessity that the market breaks down. Not an absolute one, but remember, these are heavily indexed stocks. That's a 17% drop right there on Netflix if hit. So one of the better looking setups, consider it an official trade idea. If you want, maybe that's too aggressive for you. That's S1 for support. Too little to target. It's too close to the breakdown level. But when that goes, it'll help seal the deal, I think. And then you target. Traders tend to gyrate around these reaction lows, but these are minor support levels. So there it is. So you can call that T1, 2, 3, 4. Again, we'll see what happens if it triggers and fires off. I'm just going to add T4 right now. So next time I revisit it. And remember, like any of the trade setups that I've talked about, They are untriggered. A trade setup is different from an actionable active trade. It's a potential, this is a potential bearish trade in a bearish rising wedge pattern with negative divergence, divergent high, pending a sell signal, which would be a break of the trend line. And then maybe if you want partial position or take it to a full position, or you could wait if you want to give it the benefit of the doubt of a break below 904, and then boom. And this one should do something like this. All right, that's it. I'm going to stop there. You know me, I could talk for 2 hours if I wanted. I could go through every component of the Nasdaq 100, which, by the way, I often do. That's what I'm doing when I'm not posting things to you. I'm looking at many charts. So let me get this one out to you. I'm going to have somebody knocking on my door any minute now. So I will, after I square those guys away, get them working, I'll come back in and do an update on commodities for you. Yeah, that'll be next. This has been Randy Finney with Right Side of the Chart. Have a great day.